Hey traders and investors, it's Serge Berger here. Today we're going to talk about tomorrow's ECB meeting, which is the European Central Bank interest rate policy meeting for the month of June. It is expected that they're going to be lowering 10 basis points in the regular interest rate and then also in the deposit rate for the banks at the ECB, which would maybe bring it to a negative interest rate. There is also talk of them actually going out and doing some real quantitative easing, buying bonds and things like that, although that's somewhat less likely according to consensus. The reason I want to cover this today is because I got a lot of questions on this this week because obviously, in case you don't know, this is a huge meeting. It's a very, very important meeting. It's going to have implications across asset classes from equities to certainly interest rates and FX markets and commodities. So the question is, are you positioned for it? And I think in general sense, what's important to understand is sort of what has happened over the past couple of weeks or so heading into tomorrow's ECB meeting or an interest rate announcement. Stocks, if we look at the S&P and most other U.S. Stocks, also in Europe, have risen. Okay, so risk on. Question, of course, is going to be as such as if this is a fake out rally ahead of it. If you look at bonds, I'm just going to look at the TLT, which is representing medium to long-term U.S. bonds. Bond prices have risen, although in the past few days have come off, but nonetheless risen as a trend over the past few weeks. The euro, which is just here represented by the FXE, which is an ETF, just to make it simple, since we're looking at ETFs. You can see the euro has gone down, okay? And as an extension of that, or the inverse of that, I should say, is the dollar, okay? And the dollar index has risen. So what you're seeing is sort of relative strength from interest rates and currency markets in the favor of the U.S. or in the favor in terms of price appreciation. So you see interest rates down or prices up in terms of bonds, and also a stronger dollar versus the euro over the past few weeks. So from that point of view, certainly what's happening is a baking in of lower interest rates. Now, what I think more importantly, so this is sort of the backdrop, most importantly for investors is to understand that you don't want to position yourself ahead of an event like this in any sort of big gambling. Okay, some people, professional investors out there are going out and playing options things, with a few months out in the future, betting on some sort of move. I really, at the margin, would argue against doing anything. Stay in as much cash as you can. I'm currently in about 75 or so % cash heading into tomorrow. I'm long a few things, I'm short a few things, but overall, I'm really trying to be in cash. And I've navigated these waters so far very well this year. We're up about 12-ish% so far year to date, mostly because of this defensive stance. This year has been all about avoiding the blow-ups. Particularly, and then I think tomorrow's ECB meeting is very much one of those events you want to avoid the blow up. Once you have seen a move, an initial reaction, we can then react to it better. If we see that stocks are getting hammered, maybe it's time for a little bit of short side play. If stocks are holding up more or less, maybe it's time to add to long positions. So all in all, my main point is if you are ready for tomorrow's ECB meeting, if you're lightly positioned, tread light, have a lot of cash, see what the initial reaction is, and go from there. Hope this makes sense. As always, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Take care, and see you in the next video.